on page 11. 1250 property says gain on real property used in trade or business. Recapture depreciation is excess, straight line, or over ordinary, except for ACRS commercial property. And I'll cover that down a little bit later in this slide. So in the 1250 world, is the fact that here, and I can tell you that when I went to work for the firm that I'm part of now, is the fact that the partners in the firm, the first thing they told me about depreciation was the fact that we never take accelerated depreciation on real property. And I'm going like, why not? It's a better deduction. You know, I was right out of college. I thought I knew something. Well, they clipped my wings real fast. Because what did they say? How you place it on the depreciation schedule, that's the marriage. It may come faster, but when you sell it, that's the divorce. And you want to make that as what? Less tax as you can for the client. So my point is, in the practice that I've been involved with over the years, is we've never had a 1250 recapture. But it's because we understood the rules. Now let's look, and the fact was, we just didn't accelerate depreciation on those buildings. And as a result, we always see a 1245 recapture or 1252 on the farms, but let's look at these right here. I'm going to draw a line here. Recapture is determined by purchase date. So whenever I used to do a lot of staff level training courses for different CPA societies around the country. In the staff level training courses, staff level 2 individuals, what you do is you start out with the depreciation chapter. Right behind it, you would do the 4797 chapter, and right behind it, you do the Schedule D chapter and installment sales. And then you follow up with like-kind exchange. Because that's kind of how the transition goes. So what happens here is we're actually, or maybe I should ask this. I talk about 81, 86, and after 86. What dates does that have to do with a 1231, 4797 schedule? Depreciation. So what happened is we had the old ARD life, and in there on page 11, it talks about the different lives there. But at that point in time, the general rule was if you use straight line depreciation, there was no recapture. If you use accelerated depreciation, it's the difference between the accelerated depreciation and straight line. Well, those assets prior to 81, why did they even change the law in 81? The biggest audit issue prior to 81 was the life of an asset. Because there was no required life. Required life started in 81. But the point was, it's that prior to that, if you set up everything in straight line, there was no recapture. If you accelerated, it was the differences. Back then, you could have buildings anywhere from 40 to 60 years. So you might have a few buildings left, probably not, but the difference between accelerated and straight line are getting close because when it's fully depreciated, what's the difference in accelerated and straight line? Nothing. Think of that $100, let's say we had a $1,000 building. Whether it's going to be depreciated over the same life, but when we get to the end of the life, there is no recapture. So let's move to the next one. 81 to 86. Well, what it says there, and that's in our caution above, if it's ACRS non-residential or commercial real estate and you use accelerated, it's as if 1245 property. So when you get a new client and they call you on the phone and the question on the sawmill, the real answer was, the guy called me and said, I can sell this. It was a 1250 property. Somebody else did the tax return. I looked at the depreciation schedule, and it was on an accelerated method, which meant that $200,000 was, or up to that, we've learned now as if 1245 on the commercial ACRS, it's either the depreciation taken or the gain. In this case, he had a $50,000 gain today, even though it was on installment, because ordinary income doesn't qualify for installment. So when we get toward the end of the chapter and we talk about installment for a second, we've already discussed it. We'll already know those answers when we get there. And what happens to the residential property? It's the same as the old rule. So it says it's the accelerated over straight line in the ACRS period. Here's the neat thing. From 86 on, there is no recapture. There is no recapture. So how do we summarize that kind of up? 1250 property, here's an example. Purchase a commercial building for $100K, ACRS accelerated depreciation, $100K, sells for $180,000. Well, commercial we know is as if 1245. What did I just do? 100K. Net book is 0. Gain is 180 total. As if 1245. What's the answer to this one? 100,000, 1250, recapture, ordinary, because it's a commercial building during ACRS, and we've got an $80,000 net 1231 gain. The reason why I use that example, that's probably going to be the only time that you're going to have the only time you're going to have 1250 recapture, and that's why that example. So the point, and the reason why I'm pointing that out is the fact you have to look back. Now I have another question for you. This is not in the book. You seem to be following it along.